Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. We turn now to Torsten Slok. Paul, you read the note. I didn't read the note. Why don't you bring in Slok of Apollo Management?
Absolutely. Torsten Slok joins us here. He is the Apollo partner and chief economist. Torsten, a lot of the parlor game here on Wall Street is when will the Federal Reserve cut interest rates in 2024 and by how much? You came out with a note today saying, whoa. There's a reasonable argument that they won't cut rates in 2024. Tell us what you're thinking.
Thanks for having me, Paul and Tom. I think that the reality now is that we can no longer ignore how much financial conditions have eased since the December 13 FOMC meeting. We have seen the stock market reaching new all-time highs, of course, every day at the moment. As we know, we're seeing credit spreads tighten a lot in investment grade, in high yield, in loans. We're also seeing IG issuance in January, and now it looks like in February also would be the highest January and highest beginning of the year that we have had ever in history. High yield issuance has been strong. Loan issuance has been strong. On top of that, IPO activity has been picking up. M&A activity has been picking up. It really is not surprising with this significant rebound in capital markets activity that the employment report for January was strong. And it is really also not surprising that the inflation data also was strong. So the bottom line is, I think that the market now has to realize that the data is just not slowing down. And the Fed pivot has given an additional tailwind to the economy and to financial markets and financial conditions and to capital markets. And all that is likely to continue to be supporting growth in consumer spending, in CapEx spending, in hiring for most likely the better part of this year.
Is there a scenario for you where the Fed actually hikes rates in 2024?
So I know Larry Summers and several others have been talking about this as a possible scenario. I do think that they would be reluctant and very reluctant to do that. But I do think at the same time that it's clear that the market has, on the back of the Fed pivot, declared victory and said that inflation is no longer a problem. And the problem is that inflation is indeed looking like it's becoming a problem again. You're having, obviously, average hourly earnings is in the range of 4 to 5%. This has to come further down. This is not consistent with a 2% inflation target. If you look at the NFIB survey, both for wage expectations and selling price expectations, they are all beginning to go up. And finally, you also have a number of other indicators that are leading in terms of what inflation is doing, and all those continue to point, in particular, we look at some of the underlying trends in the trimmed mean and the median inflation, to also more upside. So the conclusion is we are simply not done fighting inflation.
Torsten, the hallmark of your work at Deutsche Bank and now at Apollo has been a holistic approach to economics. What's the character of our nominal GDP? Not everybody, near everyone's got it wrong. What's the character of our animal spirit out 2 and 3 years?
I think this is a really important question, Tom, because as you just said, first of all, let's think about and let's evaluate our own, meaning the market's ability to forecast things going into 2023 and 2024. In 2023, everyone everywhere, including most likely also the Fed forecast, the consensus, the market was saying we will have a recession, and we turn out to not have a recession. The continued strength in the economy surprised everyone. This year, everyone came in and said, the Fed will cut rates 6 times, maybe even 7 times at some point, because we will get that slowdown. And now we're sitting here a few months into the year, and the economy has simply not slowed down. The employment report in January at more than 300,000 jobs created was just really, really strong. So I think a very important dimension to your question, Tom, is that the U.S. economy is just incredibly diversified. It is really difficult for the Fed to cool things down. But it has turned out to be that the consumer is much less sensitive to rate hikes. Corporates are less sensitive to rate hikes.
So
as a consequence, the diversified economy continues to do well.
And the scale of it, folks, I think the media, and I'm guilty of this as well, does a terrible job of showing the size of the American economic experiment versus other nations. We're on Apple CarPlay. We're on YouTube. Type in Bloomberg Podcasts. We've had a huge response to YouTube. Paul and I are humbled by it. Lisa's not humbled by it, but Paul and I are humbled by it. And there's a live chat there where someone just told me their mother threw out their varsity jacket and they've been in therapy for 30 years. Why don't you continue with Torsten Slok, his important research note this morning?
Absolutely, Tom. We are speaking with Torsten Slok, Apollo partner and chief economist. Torsten, just from an optics perspective, not an economics perspective, but from an optics perspective, how difficult would it be for Fed Chairman Jay Powell not to cut rates this year after, I don't know, strongly hinting in December that that was going to be the scenario?
Yeah, I know. But I mean, I think that the markets have been overinterpreting what the Fed actually has been saying. He was at the press conference in December actually reasonably balanced. He was just saying that, well, for now we're on hold, and this was certainly the clear message. But more recently, several FOMC members have been coming obviously out and saying, well, maybe we do need to stay higher for longer. So with that backdrop, I actually don't think that it's quite simple for the Fed to just continue to say, well, maybe the risks have now tilted more towards some more upside risk, both on both sides of the dual mandate, both when it comes to employment and when it comes to inflation. So on that front, I think that the Fed communication challenge is actually much more straightforward relative to the significant roller coaster that markets have been through, from first, again, pricing 6 or 7 cuts to now pricing 3 cuts. And maybe as the data, again, we had jobless claims that were strong yesterday. We had inflation ticking up a bit high yesterday on the month-over-month. All that would make the market where a lot of the action and a lot of the movements needs to be.
But Torsten, we're here among friends. Nobody's listening. It's a Friday. Hasn't ISLM theory and aggregate demand supply theory been overwhelmed by bulk productivity across America? Hasn't basically the IS curve taken over from the LM analysis?
True. I mean, there's certainly a lot to think about, because another way of saying that is this question whether was it supply that drove inflation up and now down, or was it actually also demand? And the San Francisco Fed studies that have looked at this have found that indeed supply played a role, and 2/3 of the increase in the supply chains was because of supply chains that got clogged up and are now being straightened out. But 1/3 was demand. So that's why the issue now becomes, well, if demand did play a role, and maybe now we have more demand simply because of the wealth effect, because the stock market going up, because of the easing of financial conditions, then maybe we are having a shift in the ISLM curve where we now suddenly have that it's demand that's beginning to play a role in driving inflation higher. Yes, yesterday's story was that it was supply, but looking ahead, it looks like demand is beginning to become more important.
Torsten, one final question. Paul said, ask Torsten this. I said, Paul didn't want to be rude. Are you buy, hold, or sell on Apple? Which way would you go, Torsten?
So I don't have any view on individual stocks, but I would say that my main conclusion from an investing perspective is that if there's one thing that we should do as investors, it is to listen very carefully to what is the Fed trying to tell us. And as the Fed
listen to you.
More recently,
no, you're supposed to say, Torsten, you're supposed to say you have to listen to Bloomberg surveillance. Torsten Slok,
Bloomberg surveillance, of course.
Thank you so much.
If the Fed says they will keep rates higher for longer, then they will probably keep rates higher for longer. So that means front-end fixed income continues to look attractive.
Did we get an answer there?
Yeah, well, I'm buying short year.
Okay.
Short.
Torsten Slok, thank you so much. The Apollo manager. Joining us now, and Paul, this is the romance you've lived on the sell side.
Oh, sure.
You get on the plane,
Yep.
It's romantic and all that. We're looking at him on YouTube here. Dan Ives looks like you could blow him over. He's so tired. He's in Bangkok, Thailand right now. We're thrilled that he could join us on an Asian tour. Dan, how long does it take you to get done with jet lag coming back from Asia?
I mean, look, it depends. I mean, look, it's these trips, obviously well worth it, but
Yeah.
you always have some jet lag going
Right.
in after that 21-hour flight.
For those of you on Apple CarPlay, you can just see that Ives' channel and Deborah Kerr and the King and I here. It's the same color scheme as what Deborah was doing with Yul Brenner. Dan, serious conversation now, and you are more than qualified. I understand AI NVIDIA, AI Microsoft. Paul explains to me they're going to make fancy chips. Apple's not going to do that. What's the AI plan you glean for Apple?
Look, within Cupertino, the next big thing I think comes out WWDC. I mean, obviously Gurman breaking the story, how they ripped the Band-Aid off on EVs, but now it's all focused on AI. We believe the AI App Store, a separate AI App Store, will be the first step. And I think for developers, that's important because for consumers, they're going to be able to now, over the next 1-2 years, be buying separate AI-driven apps off of an iPhone 16 that has exclusive AI capabilities and LLMs built in. This is the next phase of the growth story within Cupertino.
So, Dan, I mean, I think what we've seen, and you've certainly explained it to us very well over the years, that Apple doesn't feel the need to be first. Even in iPhones, for example, they just need to come in with the best and most elegant product. Is that kind of the strategy we're seeing with AI? They're certainly not first. They're certainly not leading edge. But do you fully expect them to have a play here, an angle?
Look, I mean, there's 2.2 billion reasons. I mean, that's the amount of iOS devices. For them, they don't have to be first because they have a golden install base that's unrivaled. And clearly right now, I mean, sentiment's negative on Apple out there. And I believe what the street's missing is going to be this renaissance of growth, not just AI into the Apple ecosystem, but I think it's going to spawn just more and more upgrade opportunities we go into the next, call it 12, 18 months. And that's going to be huge for the sum of the parts. Keene talked about AI in terms of NVIDIA and Microsoft, but now it's the second, third, fourth derivatives of this AI revolution that hit.
So, Dan, you're in Asia as we speak. What's the feeling there about China and Apple and as an end market for Apple products going forward there? Because as you are well aware, that's probably the big issue for the stock right now.
Yeah, earlier this week in Hong Kong and in and around China, it's like the video thriller, the negative, the horror show, right? In terms of the view right now of China tech, and I think fears about just the economy in China. I think when he looks at Apple, it all comes down to what does demand look like in an economy like that. We believe to that point, it has started to stabilize. I believe the street's factoring in a lot more negative than we're seeing here. I think the overall sentiment right now is basically anything but China, and you own U.S. tech. The AI revolution, no one wants to be outside the bar at 10 p.m. when it goes till 4 a.m.
I'm going to talk with Paul Sweeney on this, and then we're going to go to Dan Ives. I want to hear from both of you on this. There's got to be a point where operating officers of any visible company just get angry.
Yeah.
And the CFO turns to the CEO and says, look, we're modeling this out the next 18 months, Paul Sweeney. Let's do it now. Is that where Apple is now, Paul?
I think for China, and Dan, I'll go to Dan on this one, but for China, it's 20% of their sales. It's a huge part of their infrastructure. They have to be there. Tim Cook is over there all the time trying to make it work here. So, Dan, I mean, is there a scenario where China is not, a critical market for Apple?
Look, I mean, it's the hearts and lungs of Apple in terms, not just from growth, but of course from a supply perspective, and that's the reality.
Right.
And I think Apple recognizes you have 200 million iPhones in China. They've gained 300 bips of market share the last 18 months just because of what they're going through. They're not throwing in the white towel.
But Dan, come on, the CFO, nobody's got a profit machine like Apple. Let's start with that basic summary here. There's almost a point where this put on Apple, they go enough and do something financially to right the ship. Is that feasible?
Look, I think for Apple, anything's possible. In other words, like all all options are on the table in terms of where they can navigate things. And for Apple right now, they are in just a massive position of strength because of the install base. And I think they recognize Cook, they'll navigate headwinds in China to get into the other side of this because of what's on the horizon. It started with the Vision Pro, then it's AI App Store, and then it's AI within iPhone 16.
Paul, get one more in here. Can I state off the WACC screen on the Bloomberg terminal, the return on invested capital for this dog of Cupertino is 55%. I've never said that number, folks, in umpteen years.
Exactly. Hey, Dan, real quickly, what's the prognosis here on Apple's decision to back out of the car business?
I think that was just writing was on the wall. They had to rip the Band-Aid off, focus on AI. I mean, obviously, a decade lost. But for them, you can't keep putting good money after bad. They got to focus on AI. This is no different than Zuckerberg and Meta, taking away from Metaverse, going toward AI. It's the smart move. They needed to do it. And look, it was a painful learning lesson, I think, for Cook.
Right. Dan, seriously, safe travels. You're a trooper. Love what you're doing. I don't agree with him, but small detail. Dan Ives, the Wedbush. It's not that we agree or disagree on buy, hold, sell. Mr. Ives leading the charge for the enthusiasts of artificial intelligence. And this is our technology conversation of the month. It's March 1st. But we're done, Paul, after Mr. Neri, or Antonio Neri of HPE, their CEO. And I'm going to put up here, for those of you on YouTube, you can see one of my most beloved Hewlett and Packard artifacts. This is the 12C that got me into this chair with the obligatory CFA sticker on it. Nice. And Sweeney's got their killer app, Antonio Neri HP 12C app on his Apple iPhone. Mr. Neri, honored to have you with us today. I want to carry on from Chris Miller's wonderful chip wars, the battle of, say, Silicon Graphics coming into HPE and all of this hot air about AI. You've got HPE GreenLake. How are you going to join NVIDIA and Microsoft, your good competitors, in the excitement of AI? What's the path over the next 2 years?
Well, good morning, Tom and Paul. Thanks for having me today. Obviously we are living in a massive inflection point with AI, where I think, is the most revolutionary technology of our lifetime. It's going to change everything, the way we work, the way we live. And when you think about that opportunity, I think about the opportunity to change everything from a technology standpoint, but also from the business standpoint. And so us with HP GreenLake, we have a unique opportunity to democratize these AI technology to everyone. Because today, AI has been only used for the large institution, whether it's government and academia. But going forward, enterprise have to adopt those technologies.
I get
and
the,
HP GreenLake is like that.
I get the AI idea within computer science, like what you've done in your leadership over the years at Hewlett Packard. But what I don't understand, and I think there's a lot of doubters, when you say at HPE GreenLake, you're going to unleash the potential of your people, what does it actually mean 2 years out?
Well, it means, a significant amount of automation and business insight that you can gather through the data and the application of these technologies. We see that across multiple vectors or industries. The robotics in manufacturing, through finding cures for major diseases. We have some amazing use cases we're working today with AI, finding and accelerating the cure for Alzheimer and dementia. One of the things we're doing is trying to model the entire neurological brain to find what are the proteins that causing those issues, but also better climate research and forecasting. But when you bring it to enterprise, it's all about productivity, in the legal space, in the finance space, in the operations space. And this large language model accelerates that set of capabilities.
Antonio, what I think a lot of investors are trying to figure out here in these early innings of AI is how much of this AI spending in terms of capital expenditures is incremental, or how much of it is taken away from other tech budgets, maybe IT budgets, for example. What's your experience so far?
Yeah, Paul, I will say AI has a life cycle from training to fine-tuning to inferencing. Most of the action in the last 5 quarters or so since we have gone through this hype has been on the training side. These are companies, unique companies that are building large language models, now exceeding 1 trillion parameters, if you will. And they need a lot of compute power, right, to keep training and retraining the model, to reduce the cost of those models, but also to make it more accurate so you can trust it. Enterprises are in the early stages, and I don't think they're going to build the models itself. They're going to take a model, they're going to give context to the model with their data in a location where they can afford. Honestly, I think that's the reason why GreenLake is so important in as-a-service model. You only pay for what you consume versus outlaying tens of millions of dollars of CapEx up front. And then the value comes from the inferencing, where you deploy the model, where the data is generated so you can actually deliver the outcome, whether it is processing video surveillance or whether it is in the manufacturing floor to automate processes. This is where we are in the early stages, and I think that's going to it's going to be one of the biggest growth in 24 and 25.
Antonio, you just reported earnings. You took your full year guidance down. That was in part due to the networking business leading to that miss, and that was one of your better performing businesses last year. What's changed for you in that business?
Well, it's a little bit the success we have had, right? So in the last 2 years, we raised our revenues in the networking business by $2 billion. We took share from Cisco, and we have an amazing portfolio. And I just came back from Mobile Congress. You can see the use cases of inferencing at the edge of the network, for example, the monetization of 5G and private 5G. But what's going on now, customers are digesting the last 2 years' purchases were very significant. In fact, we grew over 40% year over year. And so this comes back, but this is why the merger with Juniper in the networking space is going to be a terrific addition to our portfolio and a value creation for us going forward.
We have time, sir, for one more question. I've just got to go back, and folks, full disclosure, I'm going to redo it as a book of the summer, Chip Wars, Chris Miller's fabulous book. Antonio, Seymour Cray was with Control Data and all that, and he made a wonder computer of my childhood out of Wisconsin and Minnesota. After 3 mergers, Silicon Graphics and all, Hewlett-Packard Enterprise, which people think is stodgy, picks up one of the magic names in 2019 in computers. What are you going to do with Cray Exascale?
Well, I mean, amazing companies that changed the landscape in computing. Both now, Cray and SGI, the Silicon Graphics, are part of our server business, delivering these amazing systems. We call it supercomputing.
Yeah.
To give a sense, those systems today are deployed in the Department of Energy, and they have many coming online. And so our goal is to use the system to solve some of the biggest challenges, to design better engines, more sustainable solutions in the life science and climate research, sustainability. So this is why we made the investment. I think I will say, Tom, what people misunderstood when we bought Cray, we bought a company that had silicon and software, and we're able to turn that into a capability that solved these challenges. That's why we are excited about it.
We're out of time. Antonio Neri, you got to come to New York. You got to come in our studio. I need to show you my HP 12C. Mr. Neri with HPE, the wonderful follow-on of all the work at Hewlett-Packard. This is a joy. Out of Chicago with Banrion Capital Management, Victoria Bills joins us with incredibly detailed notes about where we are and what to do with money. Tell us what Banrion does exactly. What is the clientele? What's your headache on a Monday morning?
Oh, wow. Well, personally, my headache this morning is just the jet lag getting in, but I'm super excited to be here. Yeah. Banrion Capital, what we do is we're an alternative investment platform for financial advisors to access alternative investment solutions on behalf of their clients. So we're talking REITs, private equity, venture capital, anything related to the private markets. Essentially, we help to be a facilitator for financial advisors.
Then what Paul and I have been talking about all this week is the valuation of private equity and credit, given that there's no transparency. What transparency do you see at Banrion on this new, Paul, am I right, exploding industry?
Yep.
Oh, absolutely. A lot of like what we're seeing right now is, again, there is a lot of delay or lag in reporting when it comes to private equity, private credit. But what we try to do is we work directly with asset managers to help them understand how they can better service the financial advisory space. Financial advisors work with clients that are, for the most part, like people like myself and people like you guys who are just looking to build on their wealth, and so they want to know that their investments are safe. What we try to do is provide a lens of due diligence from an investment and operational perspective as well, to help the financial advisor fully understand the scope and scale of what they're getting into.
So she's not worried about what the Fed's going to do.
Partially, I am. I'm always worried about the Fed. I think it's always important to kind of keep what's happening in mind. And like for me, growing up, I grew up in a zero interest rate environment. So now that things are up to 5%, I would say that's kind of normal. But I'm definitely it's
Paul,
something to panic about.
Between Lisa Mateo and Victoria Bills, I'm getting hammered today. These guys are just, the Ute is here.
It is, thankfully so.
Have arrived.
So, Victoria, I was actually surprised to learn, years ago, how much the average retail advisor is allocating to alternatives. I thought it would have been a really small number, if not zero, but I'm hearing it's meaningful. It's more than 5% of a portfolio for a lot of these folks. Talk to us about kind of what you think or what you're hearing from your clients is a reasonable allocation in a traditional 60-40 portfolio to alternatives.
Great question. I would say like a traditional allocation, we're looking at around 10 to 15% in terms of allocations to alternatives. But of course, that's also contingent upon your client's risk profile, timeline, liquidity restraints. There are a lot of things that come into play outside of just what would be like a standard or like a traditional allocation, and always keeping in mind again like those liquidity restraints. So one of the things that we do is we offer not only just private vehicles but also 40 Act vehicles and 40 Act vehicles as well.
So what's a 40 Act vehicle?
So 40 Act vehicle essentially allows for...
the Securities Exchange Act of 1940.
Yes.
40 Act, okay.
Yeah. So Securities Exchange Act basically allows for fiduciary discretion, but also higher transparency on the reporting spectrum.
So one of the interesting areas on the alternative side that has just blown me away in its growth has been private credit. I mean, it's been such a hot area. And I always say if I came back to Wall Street again, I might think about going into private credit directly. It seems like a great business. We all know about private equity, but private credit, something relatively new. How do you guys think about private credit?
Very positive around private credit. I'm more bullish around actually smaller levels of private credit. So when we think about the space where essentially now that interest rates have gone up, the average, I would say, the average business owner, someone who has less than $1 million in revenue, they're having a difficult time finding loans from banks. So if you, for example, are trying to get non-dilutive capital outside of VC, small credit loans, private credit loans are actually a great opportunity, and they're a great growing space. So looking at private credit funds that basically work with companies that have less than about $5 million or working to provide $5 million in loans.
And there are
overall.
investment vehicles for your clients to get some exposure to that?
Absolutely, yes. So we have we do have a private credit vehicle on our roster right now called Merriweather Capital Group. They provide what's called the Hero Fund. And the amazing thing about it is that they essentially invest in businesses within the Pacific Northwest, and they're mom and pop stores particularly. So these are basically small-time companies, but very good balance sheets, very good debt to EBITDA, and essentially they're being managed very well, but are not a client when it comes to what the traditional banks are looking for or large private credit funds would be looking for.
You came out of the Babson Combine.
Oh,
and
yes.
The Babson Combine it's not
unbelievable.
It's
pound
not,
for pound.
Yeah, pound for pound, it's great. And part of their courage back 40 years, I literally looked out a window years ago at the David Babson Institute building, but the answer is up in Wellesley Hills, and you go up the road past the country club, and here's this oasis of bigger, broader thinking. Sift that through to artificial intelligence. Where do you look on AI? You feature NVIDIA, but does everyone win at AI, or is it a narrow group that you've really got to do some work on?
I love this question.
Okay, can I go home? I'm leaving right now. Goodbye.
AI, AI is one of those hot topics that everyone is very excited about right now. Without getting into like the nitty-gritty details, there's
Friday.
a lot of, essentially, I would say that there's a lot of noise surrounding it. So true AI, in the sense, we're looking at companies, or we're looking at essentially the ability to create more generative AI. So to me, that's where the real market is. Using AI tools, for example, to create market efficiencies, whether that's I use AI, for example, or ChatGPT to draft emails for myself. Or
You use AI to draft emails?
I do, yes. So, and I'll even say like, hey, I want to draft an email to say like looking for an opportunity to network, and it'll spout 4 paragraphs, and they'll say, okay, make it 1 paragraph, and it'll do the exact same thing but in 1 paragraph. And then I can even say, for example, I used fun example of like using AI to basically ask the question of how do I optimize my social media? There are a lot of things that
Okay,
AI.
Bob, help me here. She's spouting 4 paragraphs here. Here's my AI. All capital letters. I can't meet at 10:15. Boom. What's AI going to do for me on that email?
It's essentially, it will kind of, when it comes to like what you do on that email, I'm sure there's not much that AI can do for that.
No, but Mr. Bloomberg can do something for that. He'll show me the door.
But it's essentially, there's a lot of opportunities in AI, but what we want to focus on more is on the generative side of AI. So while it's good for operational efficiency, making certain that you're sending the right emails, trying to figure out what hashtags to use, where a lot of the AI tools are being used right now is essentially to try and get around where other people weren't able to work in the space.
Victoria, thank you so much.
Thank you for having me.
With Banrion of Chicago, Victoria Bills joins us this morning. I gotta go write an email on the break.
I know.
Good luck with
Old-fashioned.
it. Spout it out. 4 paragraphs. Longest email I've ever done is 3 sentences. Your daily look at the front pages around the world. What do you got for the newspapers?
All right, this one stuck out to me. There finally could be an IPO for athletes. This is in the New York Post. I had to read through this a few times. So it's a new investment platform. It's called Vestable. It allows fans to buy and sell shares in the future on the field earnings of college professional athletes. Receive federal approval to begin trading on the U.S. stock market. Denver Broncos linebacker Baron Browning, he's going to headline their IPO the week of March 18th. So it's really intricate as to how it works, but it's an interesting story as to how this can enter.
So he gets a big chunk of the IPO proceeds up front.
He does. He gets about 80% of the proceeds from his IPO.
So he gets cash today. Now he's on the last year, I guess, of a rookie contract, so he's about to go to free agency. And if I buy a share of this guy, I get a piece of his incremental upside in his new contracts now and going forward. So that's my risk return opportunity as a shareholder.
Okay, the way I'm looking at this, Paul's way better than I am.
How do you look at this?
If you equitize his income, he gets a capital gains treatment out of the IPO versus ordinary income. Does that make sense?
That's also a good point. I didn't think about that.
I don't know.
Always thinking of taxes.
Yeah,
very
him,
possible. Just monetizing that revenue stream going forward.
So what's the depreciation when his knees run out?
Exactly.
That's the risk.
Yep. Okay, good stuff.
Yeah, okay. We have a big pre-wedding party today, okay?
Unbelievable.
The youngest
Is there
son
anybody
of
in my aisle at Bloomberg not getting married?
No.
Lee's getting married. Everybody's getting married. Really? It's amazing. They've all got brides.
It's wedding season.
Brides
Well, not
magazine.
really, but-
Arizona's over there. She's got Brides magazine. It's like 400 pages thick.
Well, this
is like big time, though.
So
the
what do you
son
got?
of Asia's richest man is getting married, and like all the A-list celebs globally
all coming
are going
out.
to it.
Mukesh
Abramowicz is going?
Abramo might be going.
What do you got, Lisa? Explain it.
Do you know Mukesh Ambani? It's his youngest son, Anand Ambani. 3-day celebration. Okay, this guy doesn't get married till July 12th, but it starts today. You have people like Rihanna performing. You have American illusionist David Blaine. He's going to be performing there. You have 500 types of dishes, but this is like big wigs showing up. We're talking about Meta Platforms, Mark Zuckerberg. He's going to the thing. Microsoft co-founder Bill Gates, BlackRock co-founder Larry Fink. You have Sundar Pichai for Alphabet CEO. I mean, this is like big time. And it just shows
this
like,
family's the Reliance company.
Yes,
so
yes.
Oh, this is Reliance.
You have
to do business.
His net
with
worth
these
is
guys.
$110 billion.
But you have to go to their wedding.
You have to go. Now, my question is, what kind of gift, what kind of check are you handing out at this kind of wedding?
Exactly.
Or gift.
I don't know.
Candlesticks always make a good gift.
Hey, mine is a case of Narragansett, and that really goes well. Next.
Luxury skiing in the Alps getting even fancier.
Sweeney's story. Sweeney won.
Yes, he's going to love this, okay? How would you like your own ski butler?
Need it.
Who shows up with extra gloves, boots, like right there, ready for you?
That's called Dad, in case you want to know.
You have the helicopter for just over $2,000. It can take you to a mountaintop restaurant. You can indulge in 2,000 bottle of Tuscan Red. You know, here's the thing. Winters are getting warmer, less snow. They're trying to attract these big spenders. So that's why they're doing these things.
Does it matter if the Alps, I'm speaking unbriefed, is running out of snow?
Yeah, I mean, it's every year the question is, where do you go? Do you go east to Europe or west in the U.S.? And that's what people ask. I'm going west in a couple of weeks.
You're going west?
Okay, but I'm showing my age here. Stay with me, all you fossils on YouTube Live. That scene in the beginning of Charade, where Cary Grant shows up on the European pist, and Audrey Hepburn is sitting there.
Okay.
Is it still? That's all I want. Can the butler give me the coolness of Cary Grant and Audrey Hepburn?
Coolness right there at your beck and call. Yes.
It defines for a generation European skiing.
Yeah, skiing in the Alps
Audrey
is
Hepburn
phenomenal. Skiing in Europe is a whole different gig. Yeah, it's great.
Why is it different?
It's just the gig up in the Alps it's so international, so global, and it's
Audrey
not
Hepburn.
corporate. It's not corporate like you might the Vale resorts in the U.S., which are phenomenal, by the way.
Right.
But it's just a little bit different.
The difference there is you got Audrey Hepburn and Yves Saint Laurent. In Aspen, you've got a guy with a Kansas City Chiefs jacket.
Right, exactly.
Right? Final one, go.
Yes, because it's Friday, martinis are having a moment, okay?
I'm shocked.
Costing
Please,
anywhere.
I'm shocked. Okay.
You're going to pay more for it.
I'm shocked.
$30 to $150 a glass. That's what they're going for. Places like New York, it's called loud luxury. So opposed to soft luxury, quiet luxury, where you don't say, this is like where you spend a lot and you own it. And you say, I'm drinking a $50 martini, and you post it wherever you want to post it to. There's a place in Manhattan, in case you want to go.
Of course there is.
It is $45, a citrus martini at Illis. There's a $34 martini at Monkey Bar in Manhattan. So those are some places you can go to. It's Friday.
Really? I'm shocked.
No happy hour.
Have you ever had a shot of tequila at the Monkey Bar?
No.
Over on 50 whatever street. You sit there at the bar, and they got a black and white TV up in the right of Phil Silvers from like 1955 playing. And, you know, there'll be like some nurse there, and you'll go, oh, could I please buy you a shot of tequila? And the shot is like an old-fashioned glass at the Monkey. That costs $35 too as well. So that's what we're doing with martinis, right?
Yes, very expensive. Truffle-infused vodka, served in a specialty tray with olives in there in case you want.
Yeah, that's a nice touch. They do that at the Hotel Chelsea. They have the multiple.
How much do those cost?
They're beneath that, but not much. They're really actually exquisite. What I would say, and this is the basic thing, I'm interested in what you two think. I hate when they fill the martini to the brim.
Oh, because you spill it.
It is so sad. You spill it.
Yes,
it's so,
I've done that.
It's so needless. Don't, everyone out there, when you're pouring a beverage this weekend, don't fill it to the brim.
No,
I mean, that's our
messy.
pro tip. That was brilliant. Can you do that series on Monday? When we're hungover from our $40 martinis. Lisa Mateo, thank you so much. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.